Bitcoin failed to see a positive momentum shift on the weekly chart, suggesting that the buyers are not yet fully in control of the weekly trend. In today's video, we are going to be discussing the macro charts, the short-term price action, the key levels you need to be paying attention to for both Bitcoin and the total cryptocurrency market cap, as well as the potential for an altcoin season. We'll also be going over the macro charts, the broader markets, and everything you need to know about what is happening and what to expect next. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, join our VIP channel. To do that, click the pinned comment of the free channel, contact our admin by clicking this name, check out a 50+ month trading track record by clicking this link, or watch a 10-minute video showing you inside the VIP channel. You'll get access to the main VIP channel where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats from the general chat to the trading chart and education chat to the news, the trade indicator and coding chat, the help, the community trade setup chat, and of course our videos. Go ahead and check it out. We'd love to have you in there. Let's jump on in. So taking a look at Bitcoin, guys, and as we've said in yesterday's video, although we had a fantastic weekly close and that was above the prior weekly range high, it was not enough for us to be confident that the price is going to continue to brand new all-time highs. We need to still see a weekly positive momentum shift on the RSI, meaning the RSI needs to break upwards from this downtrending diagonal trend line, which is currently representing exhaustion in the trend, as well as to cause that to break out to occur. We need to see Bitcoin break through this major level of horizontal resistance at 110,000. Until we do those things, the risk of corrections are still on the table and Bitcoin is not out of the woods. So we have heaps to discuss today, guys. We are taking a look at the recent rejection, what it means now that we have failed to see the positive momentum shift, what could develop from here, where the short-term price action is likely to move to next, and even the total cryptocurrency market. Let's start on the market data. 24-hour volume and liquidation. Volume at 189 billion over here, up 26%. Liquidations down 6% at 161 million, with the majority of those liquidations actually coming from long positions. Moving over to the DXY. The DXY dropped into that 96 region and we have seen a short-term bounce on the daily chart here. This is as a result of some news from President Donald Trump stating that tariff letters have been sent to 12 countries and will be going out on Monday. Of course, that suspended tariff period ends actually, I think, tomorrow on the 9th of July. It was suspended for about 90 days. So there is a risk we do start to see more tariffs imposed on countries. And of course, if we do start to see that, we run the risk of more uncertainty around the future economic position, and the Federal Reserve may not take that lightly and may be more inclined to be more cautious moving into any potential interest rate cut. So this is not a fantastic sign, but of course it is still speculation. For now, again, you can go ahead and see that post over here. He did state that tariffs could be as high as 70%. So wait to see how that develops. Moving over to the S&P 500, we have seen the first sign of weakness here on this uptrend ever since we've actually bottomed at around 4,800. Of course, as you know, we've been in an aggressive uptrend ever since. We had some exhaustion develop here of the bearish divergence, but we were able to break through that RSI, indicating a positive momentum shift, and more so that the selling pressure was absorbed. That facilitated a move through the weekly range high, which resulted in a rally to 6,300, a little bit over. But we have now seen the first sign of weakness here with a red dot print here on our momentum indicator. This suggests that there is weakening positive momentum. So although the momentum is positive, it is a very early sign that the sellers are potentially stepping in a little bit over here and the buyers may be seeing a degree of weakness. Again, it is not too much of a concern provided this weekly high holds. If we drop below this weekly high, we then run the risk of corrections into the 50 EMA or that 200 moving average. But for now, this is the first sign of actual weakness we have seen print on this chart for quite some time. So it is definitely something we need to be paying attention to, as it could mark a local top for here for the S&P 500. So until we break through this local top, I'm going to be more cautious in my expectations. I'm not looking for higher continuations until we break through this level. If we do not break through this level, there is a chance we retest at least the weekly range high at 6,170, or potentially worst case of 50 EMA. If we break through this region, we then can expect continuations into 6,400 and 6,500. That is it for the broader markets, guys. Let's go ahead and jump into Bitcoin. Before we do, make sure to go ahead and sign up to BitGet, BitUnix, and BingX of the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go to support me making this content for you on a daily basis. And of course, you'll support yourself in your trading journey, trading on exchanges I use and I trust, as well as get access to a variety of exclusive sign-up bonuses and all of our campaigns we run on those exchanges. Check it out. We'll play an ad. Let's jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back into the video. Let's start on the total cryptocurrency market cap. And I think a lot of people are wondering, now that Bitcoin's rallied a bit, now that the market is looking pretty decent, the sentiment is becoming more and more bullish, the question is, are we going to see a continuation in new all-time highs? And are we going to even see a potential altcoin season? I think the best and easiest way to answer those questions is by taking a look at the total cryptocurrency market cap. And that is what we're going to do to start off the video, and then we'll jump into Bitcoin in just a moment. And this is relevant to both Bitcoin chart and the altcoin market, as the total cryptocurrency market cap, specifically this chart, is a good representation of the entirety of the cryptocurrency market, what the health is looking like for crypto, the overall direction for crypto, etc., etc. When we're looking at the cryptocurrency market cap here, there is one level we are watching very closely, and that is going to be this downtrending diagonal resistance we have been sitting underneath now since the 25th of May, so quite some time. We can see we have had one initial retest, a second rejection, and we have had a third rejection over the course of the last couple months. This is the downtrend we have been in, and it is the level we need to break through to facilitate a continuation into this higher time frame resistance. Only upon the breakout of this level will we see a market-wide rally. When I say a market-wide rally, this means Bitcoin will be going to new all-time highs. This also means the altcoin market will see a degree of positive performance. Again, which altcoins will do well? is entirely difficult to predict. It is sentiment based. Okay, we have seen the altcoin market performance over the last bull market, or this bull market particularly. It hasn't been similar to prior bull markets. We have had money rotating in and out of coins, and it's mostly a few altcoins that perform exceptionally well. A majority of altcoins do okay, and then there's always a couple that just get left in the dust, and we just see money rotate in and out. And the whole reason behind that is because in this cycle, there is thousands and thousands and thousands of altcoins available. In prior cycles, there were, 2,000 altcoins available in 2021, I believe, and in 2017, maybe just 1,000 altcoins. So the available places people can deposit their money or invest their money now is tenfolded, if not 1,000-folded, and therefore the same or a larger amount of funds, say double, triple the amount of funds, is spread across 100 or even 1,000 more places. So we don't see this parabolic growth in each individual altcoin. We rather see periods of excessive growth followed by large corrections when the money then rotates into other places. That is basically what we have seen happen to this altcoin cycle. Now, there is still a chance we see not a traditional altcoin season. I don't think we are going to ever see a period of time where pretty much every single coin just goes up 50, 100, 200, 300% like we saw in 2017 and like we saw in 2020, unless we see a massive surge in global liquidity. But we can definitely still see multi-week periods or monthly periods where altcoins as a broader concept perform very well, where we have some selective altcoins going up double, triple, or even 10x, but some altcoins will definitely underperform. But for us to even entertain that idea as a possibility, a mini alt season as you wish, we need to see the total cryptocurrency market cap break up here, and we obviously also need to see Bitcoin break through this $110,000 level to facilitate the breakout on the total cryptocurrency market cap. So the altcoin market has potential, but I don't think it is going to meet the expectations that many people have for it based on prior cycles. But that doesn't mean it is not going to provide many good opportunities in the future. There's always good opportunities. It's just these opportunities are going to be a lot more situational and a lot more temporary than what we have seen in the past based on the current market dynamics and how the market has changed over the years. So when we're looking at the altcoin market over here, we can see it is looking very choppy. Again, we did have a positive momentum shift here, which facilitated a continuation upwards, and the altcoin market is ready for a potential move upwards, but the market is waiting on Bitcoin to break through its resistance. If we do see Bitcoin break this resistance, the entire market will very much likely rally, and we'll very likely see the altcoin market continue upwards to 940, 930 billion. Now, this is all under the assumption the market does break out of this resistance. There is a chance we do not break through its resistance, and if we do not break through its resistance, well, then we are very unlikely to see the total cryptocurrency market break through, and thus the altcoin market will not see a mini altcoin season. So taking a look at the macro chart here for Bitcoin, for us to be confident for a continuation upwards, we use a very simple concept. We use trend, structure, and strength. Okay, these are concepts we use to define whether or not we can essentially trust a breakout, whether it be a pattern breakout or even a horizontal level breakout. This is a acronym we've used for quite some time. This channel, in fact, is an acronym we made up: trend, structure, strength. And for some of our older viewers, you might recognize it. We haven't discussed it on the channel for quite some time, but it's the foundational concepts we use to identify whether or not breakouts are essentially fake outs, or whether or not they will or will not sustain. So when we're looking at whether or not this breakout will sustain, and again, we have 6 days, guys, until that daily candle close, into that weekly candle close. So at the moment, this is just price fluctuation after a breakout. We look at trend. What is the trend of the price action? Okay, we look at structure. Is there any structural consolidations occurring? And what is the strength of the price action? In terms of strength, we can see we have got negative momentum. So this is negative. We have downtrending momentum. In terms of structure, we've got a neutral consolidation. This is going to be our horizontal consolidation over here. And then in terms of trend, that is going to be contextual to the chart you were looking and the time frame you were looking. If we're looking at the macro trend is upward in regards to the fact that we are above the 50 EMA and above the Gaussian channel. If we are looking at the short-term consolidation, the trend is more or less neutral. But either way, for us to be confident in a sustained or confirmed breakout, we need at least two of these threes to be a tick. We need at least two of these threes to be suggesting that we are going to see continuations. At the moment, we do not have any. So the potential for a rejection here is very much on the cards. It is not something we can ignore yet. And as we said, although there is a bright future ahead, hopefully, and although there is a lot of potential for continuations, we look at the 4-year cycle, for example, it is suggestive that we've still got some time here before a potential top. No matter that case, we need to take this, at face value, and we need to trade this level by level. So until we see a positive momentum shift, we have to assume this is going to be a level of resistance where we could see rejections from. The big question is, what would be the reaction for the price action if we break out? And what would be the reaction for the price action if we do not? So let's start on the if we do not for now, and then we'll come back to the bullish scenario. The bearish scenario is very simple over here. If we see a weekly candle close below the weekly opening price of that prior green candle, which is currently sitting at around 108,300, we see a bearish engulfing candle. A bearish engulfing candle, guys, with the failure to break out the RSI, would actually also develop a short-term bearish divergence and increase the potential for a correction back into 104,000 or lower. This isn't too much of a concern. The concern only really becomes when we drop below that 104,000 / lower level, particularly the most important level, if we're looking at the short term, which we'll come back to in a second, is going to be that 102,200 level. The reason being is because that is the lower point of this visible range volume profile cluster. Okay, if we drop below 102,200, we enter this low historical resistance range gap, okay, which we know bearish volatility will dramatically increase, and we will see a flash correction into the $96,000 region. If we see that happen, where does Bitcoin go? Well, guess what? It is likely going to come back to retest this Gaussian channel and 50 EMA on the macro. And if we see that retest, we do run the risk of a bear market. As we know, we have been in a macro uptrend ever since we broke the 50 EMA and broke the Gaussian channel upper band. This is also when we heard about ETF approvals, okay? And this is also when we were starting to hear about interest rates potentially reducing in the future. So the bull market essentially started at that point. We have been above these levels the entire time, having retested it numerous times. And if we do drop below that region, we enter a bear market. So that is also something to be concerned of and something to pay attention to. But again, we are in a horizontal consolidation. So until we break the range low or the range high, we are in a neutral formation. Therefore, the break up or the breakdown is neither more likely than another. Only when we are looking at speculative models such as the 4-year cycle can we potentially have a bias towards a further continuation upwards from a technical perspective, as it does suggest there is the potential for continuations into the latest October 2025, which would inevitably suggest the top is not in and we could see continuations, which would mean that this RSI would need to break, 110 would need to break, etc., etc. If we're looking at the economic policy, if we're looking at the global geopolitical environment, such as the conflicts in Iran de-escalating, we're looking at the potential for the One Big Beautiful Bill Act could add a lot of liquidity to the markets, which is bullish. We'll look at the potential for future interest reductions, which is very, very bullish. If we're looking at all of that, there is a chance we continue upwards as well. But then we also look at the risk that the Federal Reserve deems the Big Beautiful Bill Act to be inflationary. We look at the risk of tariffs continuing. We look at the risk of more tariffs being imposed. We look at the risk for potential conflicts continuing. We have a lot of speculation going on from a variety of places, and the market is more or less confused to what to do, and it is very much waiting to see how the Federal Reserve interpret what is happening and give us some information on what they expect for the outlook of future interest rate decisions. Nevertheless, when we're dissecting all of this down, the price action tells us everything we need to know. When we're looking at where the price action will be reactive from, we know a break of 110 will be bullish. We will very likely see a strong move upwards if we take a measured move of this range and apply to the breakout. The expected target is just shy of 120,000 US dollars. Okay? So, no matter what happens on the short term, no matter what happens with the news, provided its horizontal range holds and we do not break the range low, we can definitely still see a continuation to 120, which will trigger the break of the cryptocurrency market cap, which will trigger a mini altcoin season, and that may last 5 weeks, that may last 2 months, it may last even longer if the 4-year cycle breaks. Or if we see the coin go the other way and we break downwards, it is very well a good possibility that this weakness could develop further and result in a potential macro bear market. These are things to consider, guys, and again, we'll update you as the charts develop. I don't like to put too much speculation into our analysis. There are some things that we just simply do not have enough information to give an answer on. And we can sit here and, I can say, oh, we're going to do this or we're going to do that, but that would just objectively be lying, and I don't want to do that. I focus on the facts, I focus on the charts, and when there is information we don't have the complete picture to, it is better to acknowledge that and wait until we get that information than to act irrationally or blindly based on bias or based on what we want to see the price action do. Most people want to see the price action go up. And naturally, of course, I would love to see the price action go up as well. But I don't let what I want interfere with how I act, and I definitely don't let it interfere with what I tell you guys on this channel, because I like to remain very objective and very unbiased in my analysis. And I think being objective and being unbiased actually does you a great service in trading, because it allows you to remove those rose-colored lenses off your eyes and see the market, see what is happening for what it truly is, not through the lens of a biased perspective. So again, unbiased, objective analysis, that is the focus and that is what you should strive to do. In terms of the price action, guys, on the short term, we are looking pretty choppy over here. We've of course rejected from 110. We do have 6 days remaining to the week close, but there is a risk of a correction. Of course, if we do see this 50 EMA lost here on the short term, we very well could see a correction down to the 200. But all in all, provided we remain here above the 1,500 level, which is the prior lower high, we don't really have too much of a risk for a correction back to 102. And again, for us to see a steeper correction, we need to first retest 102. So overall, the expectation is that we potentially do rally to retest 110 again. I don't think that will happen immediately. I think there's a chance we fluctuate between these levels for quite some time. But all in all, 110 is really that level we're watching for a bullish trigger. And then 105 is the level we're watching for the bearish trigger back down. And whatever happens between these two levels is just going to be expected volatility moving into the weekly. And of course, if we do not resolve the breakdown or the breakup over the next 6 days into the weekly, we are then watching to see where that weekly candle closes, whether or not we're going to see a bearish engulfing candle or not. Thanks for tuning in. Have a fantastic day. Catch you all on Thursday. Look forward to seeing you all then. Bye.